Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about the U.S. elections that are going on right now. It seems like it's always an election day here in the United States, and today is the latest round of regional elections and also some state municipality, almost procedural elections, I would say, the biggest one of which is going to be the race in New York City for the mayorship. So there's a lot going on here today. We're watching Palantir. Palantir had a big earnings report out yesterday. We're going to go ahead and go over that. We saw sort of a gap up and then a big reversal. Similar to Amazon, but not quite as good as Amazon's rally, that's for sure. We've also got some serious action here in the dollar CAD that I want to look at. We're seeing the U.S. dollar all of a sudden is putting on a bit of a show, and it's coming as a bit of a surprise. I think that we were looking for a dovish USD. We're not seeing that, and a lot of that has to do with Jay Powell's attitude at last Wednesday's Fed meeting, FOMC announcements, when Jay said, maybe we got to wait a little bit before we cut interest rates again. And we're starting to see that spill over into our markets. The government shutdown rolls on to I believe it tied the record today, but we are definitely into our second month of this. And, we're looking for NFP Live Friday. I don't think we're going to get it. I'm going to have to go ahead and probably rearrange that stream as well. But we do have some other streams coming this week. Today, we're going to look at some Forex futures. We're also going to look at a few stocks. I think we'll look at Amazon and Palantir just because they're interesting right now. And if you have any questions at all, any markets that you want to look at, feel free to drop them in the live chat, and I'll see what I can do, see if I can help. So good to see everybody back over out in YouTube land. Innocent Sifo, South Africa here. Good to see Innocent. Welcome. David Sopo. Hey, Shane, how's it going? I'm doing pretty good, Davison. I'm confident you're doing well. This has been an interesting trading day, not necessarily the best one I've ever seen, but it's not bad. There's good it's bearish action, but there's good action in the U.S. dollar. Also, that natural gas trade, that is that thing's banging right up to about 4 even. We covered that in our Switch Markets Weekly newsletter. So, T Marina, hey, good to see you, T. Let me see, MLB, let me see, Cameron from the seat in East Asia, Indonesia. Good midnight. It's 1 a.m. here. Wow, that's late. That sounds like me on like Friday or Saturday night. I can't do 1 a.m. During a weekday. I have to get some sleep. Maybe that's my advanced age coming into play. That's for sure. Andrea Garwal, good to see you, Andrea. Welcome. And Tuku over there in our How to Trade community. Welcome. 1 a.m. Wow. So you got to sort of stay up till the middle of the night to trade in East Asia, Indonesia. I guess it would be. I'm not real big on the time zones. I mean, it seems like, I should know the time zones inside and out now. I don't really, though. I just know them how they pertain to my own locality. Like I know that the Tokyo opens right around 6 p.m. my time. I know that the London opens right around 1 a.m. I also know exactly when New York opens, about 7:30 a.m. in the morning my time. So I sort of know the time zones as they're local to me, but boy, if you ask me right now, what time is it in Bangkok? I have no idea. I have no idea. I'm pretty sure it's nighttime though. That's for sure. Tina, good to see you. Tina, welcome. All right, guys, let's get out to price action here. I want to start off with the dollar CAD. This is sort of an interesting trade idea. Really sort of jumped off the page at me. We've got a yearly range going back to February, right, nice spike high up here, right around 147, right at 148, and then a big sell-off down here, down to 135.38. That's your yearly range. And so anytime we're going into the last 2 months of the year, last 6 weeks of the year, we get to start looking at yearly ranges, and it's absolutely fun because these levels are a big deal. They're important. Pretty good scalping right there around 140, but we are moving higher. Now, it should be sort of intuitive, this dollar CAD move. You're seeing the U.S. dollar. We're going to pull up the DXY here in a second. You'll notice it's back over 100 for the first time in a long time. But also the Canadian dollar taking a bit of a hit. And the reason why is we're all sort of waiting for the big sell-off in U.S. oil. And in my view, I've been saying it's going to be here. It's going to be here. Well, I mean, we had some news events that did send it higher. I think that a lot of the traders are very, very skeptical about selling U.S. oil right now because of that Venezuela situation, which appears to be on hold probably till after Election Day. I find it surprising, but definitely an interesting dynamic here. Remember, the Canadian dollar runs with natural gas and it runs with crude oil. So right now, natural gas is way up. Crude oil is sort of stagnant right around 60. I think that's definitely it's not helping the crude oil situation, not helping the Canadian dollar at all. And then the U.S. dollar is headed higher because there's new questions about what the Fed is going to do at their December meeting. So we're watching this closely. The next trade was realistically, it's up there right around that 143 level. 142. I wanted to be very aggressive there, so it's like 142.94, something like that. So it's about another 200 pips up there. Could get it relatively soon. I like that level, though. I find it fascinating. Very, very good level to be trading. And back into the golden zone, I really like that. 62% level is one of my favorites, that's for sure. Let me see. Innocent, it's 8 p.m. here. Right on. Okay. Can't beat that. Andy Tong, just got in. What did I miss? Nothing yet, Andy. We're just getting started, getting cracking here with this dollar CAD. I like the back end of that, though. Now, remember, when we draw Fibonacci retracements, I basically try to focus on the most recent spike to spike, the most recent or prevalent swing high to the most recent prevalent swing low. That's how I like to do it because it keeps us current. But we also have to understand that the time-based dynamic is not to be ignored. So when you're trading intraday, let's say you're trading intraday futures or something, I'm always looking at like the U.S. range, always 30-minute chart. We'll look at a few of those here in a second, but a yearly range, you got a big juicy yearly range. You've got about 9 months of data. I mean, that's a fantastic range to attack. And if it comes into contact with a big round number like a 143, I'm very confident in this one. But we just have to get it first. Let's go over to the Euro USD. Euro USD, very similar. We put this one out yesterday. You'll notice our 920 crossover on the monthly. Pretty good play, but now you're sort of coming back down, and that 112.57 is getting closer and closer and closer. If this market opens up to the downside, we're going to have potentially a very nice buy. Now, what I don't like about having a bunch of trade ideas that deal with the majors is they're all correlated. So you're looking at the dollar CAD, you're saying, okay, yeah, if the dollar is too strong, we're probably going to be in jeopardy. And it's the same thing here. If the dollar gets to be too strong for the Euro USD, then we're essentially taking a very similar trade. One thing worth noting, though, the timing of these trades is probably going to be a lot different. Well, we're pretty far down the queue for this one. We're still about 223 pips, something like that, before this level comes into play. And we're a little bit closer in the dollar CAD. So I expect the dollar CAD trade to go first, this one to go second towards the end of the month. But we just don't know. We don't know the timing. Right now, the U.S. dollar is really starting to put on a show. Here's a good look at the DXY, the U.S. dollar index. And we talked a lot about this over the summer. Right there sort of was your cross under back in May. and you had nice bearish action, and now the rebound's on. The rebound's on. Let's take this to a weekly chart and see what we have going. So there's your weekly. So there's your 920. Remember, the rules to the 920 strategy are very simple. If you don't know what I'm talking about, head over to the How to Trade Calm YouTube channel. Watch the video, ask some questions. It doesn't get much easier than this. The 9 EMA is crossing over the 20 on the weekly time frame. That's a significant technical event. There's no question about it. You can see this downtrend. This was an absolutely beautiful thing. If you were selling the DXY back in March, you probably went and bought a new Mercedes or something like that. I mean, if you put any leverage on it, that's a big move. And you're looking at it really selling right there at 103.74 and really headed down to where I thought we would be doing a lot of business, which is down near 90. And we're not seeing it. We saw a rebound. And the reason why is the monetary policy expectations changed. That's a big deal. And when we're talking Forex, we typically are talking the U.S. dollar. And right now, the U.S. dollar is back above 100 for the first time in quite some time. I mean, realistically, probably the first time we've tested the waters since July, late July. So this is an interesting type of a situation. Is the yearly bottom in for the dollar? Could be. I will be surprised if we don't go down and get after it. I really don't think so. I don't believe that we're done going down, but it looks to me like, 2026 may be the year of the weak dollar because of the rate cuts that we know are coming with the next FOMC and the next FOMC chairman. But right now, we could easily be in a holding pattern the rest of 2025, and that means that the dollar probably is going to get back some swagger. Honestly, I don't really know what to do with this one just yet. And the beauty of being a short-term trader or a scalper or a day trader is you don't have to know. We just have to have good technicals. We have to have a good framework and understand our risk management. You do not have to know what happens tomorrow in these markets to make money. You don't have to do that. That's the biggest fallacy of trading. A lot of people get carried away and they say, well, I got to know what's coming next. No, you don't. All you've got to do is know what you're going to do, and then you have a great opportunity to win. This right here, I'm watching this closely. If we do get this crossover, 9 crossing over the 20, we'll probably wait for a pullback to that support zone right around 98. It might be a hell of a trade going into the late year. I'm watching it closely because things are changing. Things are changing. Part government shutdown, part election woes, probably election worries right now. But also, the biggest thing we got to watch is the Fed. And I got my eyes on Jay Powell very closely. In my opinion, he completely backed off of the rate cut narrative that we thought was going to be the fact. And it's a little bit more hawkish than we thought, and it's showing up in the markets. There's no question about it. So definitely there. Let me see, Ahmed. Let me see, which pair is this? Shane? Yeah, this is just the DXY dollar index. Just a good aggregate look at the strength of the U.S. dollar. You'd be trading this as a CFD or potentially a futures contract. I believe the CBOE offers a dollar index contract. I'm not 100% on that. It's not on the CME. It's on the CBOE, I believe. Don't hold me to that, though. I don't really trade it. I just look at it as a reference. Interesting. Let me see the 100 Bitcoin. Well, I mean, Bitcoin is interesting. I've got a lot going on with Bitcoin. I don't really want to step up and issue, the greatest trade idea of all time, because I think we all know that 100 has to be downside support. If it is not, then we're going to see a washout and potentially a big time gain after the washout. This is one of those markets where retail traders have had fits trading Bitcoin, and it's very easy. We're going to pull up I'm going to show you the trend. I'm going to show you everything you need to know, but it's important to understand that things are changing right now. Now, whether these changes are big deals or whether they're temporary, we don't really know. We sort of suspected that Bitcoin was going to test the 100 level before probably rotating back up to the high. Clearly, the government shutdown is impacting Bitcoin. It's a decent observation to make. The last 4 weeks have been incredibly bearish. You went from all-time highs to a big sell-off and almost like a bearish pennant right there on a weekly. There's your sell, then we flatline, and now we're breaking. No question about it. So when we're in wide open markets like this and wide open environments, just back to basics. Don't make things too difficult. You don't have to do that. All you have to do is really understand the way that a market works and what's important. What's important with Bitcoin? Not 10,000. The biggest thing that's important with Bitcoin is that you're in an uptrend. You're in a steep uptrend. All right? If you're in a steep uptrend, what are we looking to do? We're trying to align ourselves with the pricing pressure. This is a big-time sell-off over the last couple of days. There's no question about it. You're off about 9%. That's pretty much a free fall for crypto. So what we're looking for is a retracement level that's pretty good, but we also want it really to coincide with that 100,000 level. Do we think 100,000 is going to bring bids to the market? I would say, yeah, you could probably step up and scalp that on really short time frames. I don't have a problem with that. But the thing that we have to remember about this 100,000 level is we traded it, and we really wore this level out back in January, early spring, and then we came back and we traded it again, and it was support. It was beautiful, set up as beautiful support back in May all the way through June. Remember those streams? We were buying Bitcoin because it was there. There was no reason to reinvent the wheel. Now things are a little bit different. We're going to hit this level for the third time for an extended period, more than likely this year. And one of my big philosophies and my big theories, and it's not really a theory because I've got prima facie evidence for the last 15 years, is when these levels get traded in extensive amount, meaning over and over and over again, they lose their power. They really do. And the reason why they lose their power is we achieve what's called saturation. The orders get saturated. The idea behind a price point is very simple, or a key level. If we're at 100,000, the idea is that you're going to have an idea of what 100,000 is worth, and I'm going to have one. You may want to buy it. I may want to sell it. That's what gives us that two-way action to make successful scalps over and over and over again. The problem was when you trade these levels for a long period of time, everybody sort of gets used to them. Is 100,000 where I want to dig in and put my heels against right now? Think about what we're trying to do. If I believe that we're going back up to 125,000 and beyond, if I buy 100,000, I'm looking at making 25% on the trade. That's legit. That's a lot of money, no question about it. So if I'm in here and I'm saying, okay, I'm going to take a position in the cash markets, 100,000 gives me a shot, maybe at 25%. Venture capitalists typically would sell their children for 7% a year. 25% is going to bring a lot of interest. But from a retail perspective, how long can a retail trader afford to hold a position in Bitcoin? Can you hold it if it goes down to 75,000? Can you hold it till it goes to 85? Can you hold it at 89? That's where things get very, very challenging, because we know we're pretty much right that the bullish side of this market's correct. However, we don't know how bad the damage is going to get underneath 100,000, or if we do test it, I believe we're going to trade underneath 100,000 just to wash out the retail longs. I really do. Let's go ahead and see if we can find a retracement zone, though. I'm a big fan of Fibonacci retracements. You guys pretty much know that by now. You're probably sick and tired of watching me draw them, but they really are effective. I stand by them as being one of probably the top tools out there, and the reason why is the Fibonacci sequence and the golden ratio really present throughout nature. I've been watching Fibonacci applications to the financial markets for more than a decade now, about 15 years, 14 and a half. So when we look at a chart like this, I see a lot that probably a novice trader doesn't. I see a beautiful spike low down here, which is also what? April 2025, right? It's the yearly low right there. Yearly high came across the board in October up there at 125, almost 126,000. Now we're cutting back to what? About 50% of that range. That coincides with where we were in January. So all of this volatility and all this action in Bitcoin's back to where we were in January. Fascinating. To me, it's fascinating. So if I'm thinking of buying it, do I want to buy a 50% level? I do not. I'm not a 50% trader. However, you can't really ignore the yearly 50% range and 100,000 right there. I probably would be long. I would look to be going long right there just because it's a pretty good technical zone. I don't like 50% at all, but 100,000 and that 100,000 is 50% of the yearly range. Yeah, we're starting to see a lot of evidence that we're going to bring some buyers out of the woodwork here. Last thing I'm going to say is this. The superior entry is down here around 95. The back end of the golden zone, I would be very, very, very surprised if price goes down and takes out that 62% level. I love 62%. My favorites are 38 and 62. 78 is a lot of fun to trade as well. We just don't get it very often. 62% is pretty good stuff. I'm watching that closely. 94.225. I would love 95, maybe 95 and a half, maybe 97.50. That's not a bad one either. So this zone is where I would be targeting to take the longs. I think we definitely could get there in the next few hours. I mean, we really are coming off in a big, big way. We're tanking when it comes to Bitcoin. Absolutely tanking, that's for sure. Let me see, Innocent Cypher. I've been blowing my accounts. I really need these classes. Well, what I just tried to go over there, Innocent, is understanding what a key level is, applying a technical indicator that's going to align you with the broader trend. I wouldn't really say I'm a trend trader, but I'm definitely a trend follower. And if we can identify where the pressure is, maybe bullish, maybe bearish, we know Bitcoin is bullish. There is no question about that. You know, the big money bought in back here in October of 2023. Okay, great. But it's just been an uptrend. 1, 2, 3, 4, 5. And now you're starting to see maybe that Elliott wave sequence starting to start over. Interesting stuff right here. This is an interesting pullback. I would love 62%. That would be a great trade. That'd be something I would be very, very interested in. Maybe taking a cash position there. Could be pretty good. Could be pretty good. Let me see. 50 EMA weekly would do, I guess. Yeah, I mean, you could be looking at your EMAs here on Bitcoin for sure. Do you also do analysis on the gold market? Yeah, we're going to get to gold here in just a second. We've got a few other things to get. And also the 50 EMA, the weekly 50 EMA is around 100. Let's go ahead. Let's have a look. I'm going to just go ahead and adjust my EMAs here. $50's down here a little ways. You must be in a different market. It's okay, though. Interesting stuff with Bitcoin. Okay, let's go ahead and remember, if you want to trade any of these things that we're talking about today, be sure to get on over to Switch Markets. Switch Markets has everything you need, thousands of markets, tight spreads, reverse KYC programs. Honestly, there's a lot going on over there. So if you need a place to trade, go ahead and hit it up. Head on over to switchmarkets.com and they'll get you up and rolling. Week 45, we looked at these. I have to tell you that pretty much everything's off the board. Pretty much everything's off the board for right this minute. The U.S. government shutdown is rolling on, and that is going to dictate our economic events that are released. And you can see government shutdown ties the record. Live updates, Senate fails to advance funding for 14th time. They're not going to open this thing, at least till not after today's elections. So that's a big deal. As far as the BOE interest rate decision, that would probably be my big one that I'm looking at. As far as the RBA goes, I mean, we haven't seen just a tremendous amount of action here in the Australian dollar. We've got a pretty good bearish look at the Australia dollar today. We'll go ahead and look at that as well. But big picture, what could we really say about this week's news cycle? Wildly unpredictable. I have NFP live scheduled for Friday. I don't think we're going to get it again. That's going to be the second month in a row. So definitely want to be careful when you're trading this week. Not a whole lot of market moving events. We wanted our JOLTS job numbers today. Didn't get them. ADP employment reports. I believe we may get the ADP because that's a private company. Don't hold me to that. I know JOLTS was a BLS number, so we didn't get that. BOE, we're going to get NFP. I don't see us getting it this week, but we're going to go ahead and stay tuned and just roll with the punches. All right, Australian dollar was one of these that we definitely need to be looking at here. Big-time news event that came out. You got right here. You've got, big picture, the USD charts are all really looking the same. So I'm really leery about putting out a bunch of ideas for the USD. We've already got one for the Euro USD. We've got one for I believe we have one for the yen as well. And then what do you have right here? You've got a big pullback right around 64 level. That's a pretty good level to be looking to go long from in this Australia dollar for sure. So if you do get a bigger sell-off here, that's a pretty good trade. Just remember all of these things have your US dollar being the featured asset. So if something crazy happens with the US dollar, the Australian dollar is going to be in trouble. The Euro USD is going to be in trouble. They're all going to be in trouble. So we got to be very careful about not gaining what I call double and triple exposure. That's for sure. Let me see. Yeah, I'm going to go ahead and I'm going to pull up the gold market as well. Next generation, next gen. Good to see you, next gen. Explain the 9 EMA. All right, very simple. We just go right up here. If you're on TradingView, your indicators, you go to moving average. Go right down here, moving average exponential. You go ahead and you give that a click. And once you add that, you've got your 9 EMA. You bring up your periodicity, and you're just going to use a period of 9, a length of 9. The source is the close. No smoothing, no offsets, no nothing. And that's going to give you a pretty good look at what your 9 EMA is. Simple. It's just a 9-period exponential moving average. It works great with our 20 EMA. Pretty solid. I like the 13, but the 9's pretty good. We have a lot of fans of the 920 crossover, and it's pretty strong. It's a pretty strong trading approach. No two ways about it. All right, we got several questions on gold, so let's go ahead and just see if we can kick the tires on gold. 39.50, right? So we're trading 39.50. 4,000 is our big level in gold. You can see our monthly chart. Really fantastic stuff. We were all over this one all summer long, and what you saw develop was really a tremendous trend beginning in January. All that has to do with the dollar losing some ground. Remember, as the dollar goes down, commodity goes up. It takes more dollars to buy a commodity when the dollar's not worth as much. It's just the way that it is. Right there, nice big rally, and then we flatlined all summer long, and then we broke. And once we broke, we really broke. So talked a lot about maybe going to 5,000 this year. So far, we're seeing a bit of a pullback. That has to do with the U.S. dollar gaining a little bit of strength, sort of out of nowhere. So right here, we've got 39.51. I'm still interested in buying really any type of pullback that I can. I think that's a pretty darn good strategy because this is a very nice uptrend. It's a long-term uptrend, and it's one of those that it's tough to beat long-term uptrends. It really is. Now, sometimes you get a negative, a couple of weeks that are negative, but remember, the way markets move, you're always going to have pullbacks. I don't care how bullish the market is, you're always going to see a pullback. And if you're an Elliott Wave trader, you pretty much know what I'm going to say here. Let's use my crayon here. The Elliott Wave is very simple the way that I do it. I keep it as easy as possible. That's a 1. You can see all this compression down here. This would be a 1. This would be a 2. 1s, 3s, and 5s are moves. It looks to me like we're probably headed much higher. I think 5,000. I think 5,000 is definitely going to be in play probably sooner rather than later. So if you're looking for something potentially to trade in the gold market, I mean, there it is. 38%. We've been bouncing all around this level for quite some time. We really would love a test of our 13-period EMA down there at about 38.14. I really like that zone. I also like our golden zone, 37.19. So if we're looking at what's happening right here in the market, we're starting to see some compression right between 39.50 and 39.75. That's not really, it shouldn't be out of the ordinary. We've got a big-time 38% level there. That's bringing a lot of buyers and sellers to the market. It's a heck of an area of debate. What you have is a value area setting up right around that weekly level. So there's no two ways about it. So you look at all this stuff right here, just sort of winding around and trading. It looks to me like there's two basic ways that this thing's being traded right now. Number one is you're going to have a lot of bidders that are going to step in right in this zone, and they're going to look to get the rally with the stop loss down there. The other way to trade it is to be shorting beneath this level, looking for that big extension and sell-off down here, basically washing out a lot of the retail longs. I think that's definitely a possibility. So if I'm thinking about trading it, the one thing that I want to be darn sure of, and I want to be very sure of it, is my trade location. Now, we can certainly pull up intraday charts, and believe me, we can take these things down to 5-minute charts or 30-minute charts, and we can look and try to find Fibonacci levels and try to trade this thing during the intraday sessions. We can do that. For me, it looks like the price has entered an area of fair value, and that means that we're getting compression. And on the daily, you can see the last several sessions, you're just not getting any moves. You really aren't. Look at this. You're off 0.75%, off 0.5%, you're up 2.5%. Good move. And you're off and you're off and you're off. But look what's really happening. Your market isn't really moving much of anywhere. It's just sort of chopping sideways. And when you move sideways, it's really difficult to get in on the big runners like that or the big sell-offs like this. So for me, I'm looking at my levels with definitely some very an interested wallet, that's for sure. I mean, I would like to get in here and make a play on gold, absolutely. But one thing that we can do that really will help out our success rate is to be patient. So right now, do you want to be long or short? I want to be neither. The reason why is that 38% has just given way, and we could definitely open up the throttle to the downside, maybe filling down to 38.45, something like that. I like my moving average. If we get a test of that zone right here, right in this area, I think the inside of the golden zone with the moving average, it could be extremely, extremely good. I'm looking probably at 37. What was the exact level there? 38.14s. Something like that, 38.15, maybe 38.17.50. That would be a good high-impact scalp. If you're looking to take a position on this market, I think you wait for your golden zone, the back end of your golden zone down there to come into play. I think that could be pretty good. So when you're looking at something like a gold, it's important to understand the trend is still bullish, no question. Do we have good trade location to the top side? It's okay. I don't think we're rich enough to buy it right now and just hold on for the run to 5,000. I really don't. I know that I'm not doing that. So if it's up to you if you want to take a long position, but respect the downside of this market right now. Things are changing. Things are changing, and it's a lot different than it was just a few weeks ago when this thing was just on a stairway to heaven. It really was. I mean, we're just going on and on and on. Now we're in the third negative week. I don't know that we close this week negative, but I think we have to respect it. Definitely keep a look at last week's low down there at 38.86. That could be an explosion to the downside as well. I think my moving average is fairly accurate here, and I'm probably going to ride with that one at least for right now. Good question, though. I mean, gold is definitely in an interesting, precarious position. That's for sure. Definitely a precarious position. One other thing we wanted to look at, we had a couple of the markets that we do want to see. Palantir. A lot of folks been trading Palantir intraday in the last several sessions. Remember that anytime you get earnings coming out, we had earnings that dropped yesterday, Palantir came in with a topside surprise of about, 25%, somewhere in that zone. An estimate was about 16 cents a share. They made 21 cents a share, which is big. And then also the revenue reported, that'll be the bottom line, be 1.18 billion over estimates, about 8%. So it's a really strong earnings report, but it wasn't really good enough for the markets. So in these situations, wait for the dust to clear, and then you look to trade. I think that you probably want to be bullish Palantir here just because of the potential and the deals that it did sign with the U.S. government as a big data outlet, a big data vendor. But you can see this natural area to resistance at 200. There's no question about it. These key levels in trending markets are nothing to be, don't mess with them. They're nothing to, you need to respect them because they can bring a market to a halt in a hurry. That high right there went up to 199.85 and then it fell. And then we sort of saw this break and then the big news came out. You sort of had a hammer formation. This would be an inverted. That's a regular hammer. And then you open gap down. You open gap down because of the news cycle and those earnings reports. I'm sure it got spun somehow where Palantir doesn't look like as great a bet as they thought, which is complete hogwash and nonsense. If I'm looking at Palantir and I'm trading stocks on a longer term horizon, this is exactly what you love to see develop from 200. You'd love to see a big pullback develop right from that top, 153, 155. Is that really realistic? Do you get that? Probably not. Not after a strong earnings report. 189.83 is what we're trading right now, but we could definitely keep taking our time frames down until we have an opportunity potentially to get a decent deal. So we already know by looking at our chart, look at this value area right here. 180? It's not bad. Let's run a Fibonacci. Does that line up with our value area? Right around 62%, right around 185. Yeah. Maybe 179. Yeah. Is that a possible trade for today? Potentially. Is it a trade for tomorrow? Potentially. So I think you're right down there near that kill zone in Palantir, right around 190. Strong earnings report. I know that the market's negative on it. Just remember, these big market drivers, impossible to predict which way they send price in the short term. Just be ready for volatility if you're trading stocks in and around earnings reports. That's an important thing that you're definitely going to want to see. Always know when the earnings reports are. Okay, Amazon. Amazon came out. We talked about Amazon in the Switch Markets newsletter this week. Here was the first gap area that I was looking at, to about 240, about 250 in there. We haven't traded that zone really since about last February. So those are sort of where we started the year at. And then you just saw some tremendous price action in the last several sessions coming off of Amazon's big earning reports as well. You'll notice that up here, this is another gap. This area has never been traded in my view. I don't believe it has. We can go back in our way back machine, but you can see you didn't trade it. So if you didn't trade that area, that's an area that truly was missed. So there's a couple of rules about gaps. Gaps get filled, gaps get filled, gaps get filled, and this gap was filled immediately. It has nothing to do with what we think Amazon's worth, or there's just more sellers in the market right now. That's a function of price discovery. That is how markets work. They say, well, there's a void under there right around 250. I tell you what, the market just sort of seeks that void out and trades it and now makes a decision on where it wants to go next. Now, as far as I'm concerned, the bidders, I think the smart money is waiting for this pullback right down into this gap area, which is going to be right around your February highs, right in this zone, 240-ish, maybe 245-ish, somewhere in this area. I'd probably be looking more at 240. Could you get that this week? Absolutely. Is that a pretty good long location? Pretty good. It's pretty good. Is that a long-term, potentially a long-term play for Amazon? I would say, yeah. I really would say yes. I think that's an interesting zone in a big level here if you're trading Amazon stock. Let me see. Let me see. Ahmed, wait until Venezuela's hit. Gold's going to continue the rally. Yeah, I don't see any way around that, Ahmed. I completely agree. Let me see the Japanese 225, Shane. Yeah, we got a couple other things that we do need to cover here, but I can go ahead and look at the Nikkei. One of my favorites really to trade. I mean, typically fantastic volatility. This is beautiful. So, of course, it's not beautiful if you're long today and you're getting destroyed, but realistically, the end of the COVID era and maybe some of the ideas of how policy is going to shift eventually back with that yen going into dovish territory, then everybody's looking at the top side of this Nikkei 225, no question about it. So if you're looking to trade this, to me, there's no real point of trying to argue with the trend. Now, you can see the way that the Nikkei moves. You'll get a big sweep like that, 10th of October. That was horrible. 7% loss. What do you have today? Today, 2.5% loss. Those are big intraday losses, no question about it. Could they bring you a great trade? Absolutely. You just have to be patient. Same basic type of stuff, guys. You're just waiting for a nice pullback. For me, this 38% would be just fine. 49, 40, 49, 5-ish. Somewhere in that zone, about another 1,700 points. Is that possible? 100%. Very, very, very possible that comes into play. Now, from an intraday perspective, what are traders thinking? You're thinking the opposite. You're basically thinking, okay, should I get short somehow? Well, I mean, you could definitely sell right now, but your trade location's not good. You're selling the bottom of the market. I don't advise that. During intraday trading, I mean, if you got in on these moves up here, maybe right after that Tokyo Open, something like this. If you got in up here, that's something different. But now, if you're sort of down here where we've been moving sideways since the London Open, a little bit of a buyback here. There's sort of a buyback on the New York Open right there. And now we're headed lower. I would be very careful trying to buy this market. I mean, you could try to buy it from here. Just know you're fighting a stiff trend. You could try to sell it from here, but the market's already so overextended. I would be on the sidelines until at least tomorrow's trade. I think that's very important. So for me, the long-term level is just fine. I have no problem waiting. If we do get the big sell-off down there, maybe to 49.5, maybe even 50. There's going to be traders buying this thing at 50. You can almost bet that. So, 6 of one, half a dozen of the other. How aggressive do you want to be? I wouldn't be a seller right now, even though it's not a bad way to be looking at this market. You probably got a decent shot to make some more gains to the downside, but you're selling the bottom of the market, and that typically is suicide. It really is. More times than not, you saw some fresh shorts right there coming in ahead of the U.S. Open and then the big bounce. That's really hard to do. So be careful with that one. As far as this one, Swiss yen, we looked at this yesterday. Key levels up there at 200. Great price action. Weekly price action, beautiful stuff. We wiped out the area beneath last week's low. Pulled right back down there to 189.50, 190-ish, and that's turning into a fantastic trade. Nice bounce off of 38%. No question about it. We have a few other Forex pairs to go ahead and get to, and then we'll go ahead and wrap it up. Switch markets over on our Switch Markets MT5. We got the Swiss yen monthly. I just sort of showed you that one. U.S. dollar, Japanese yen weekly. Interesting market right here. Now, you saw the big-time action in the Nikkei. Typically what you would see is a surge in the Japanese yen, and that would accompany a big sell-off in the Nikkei, and you've sort of seen it a little bit. I mean, right here, the yen is gaining a little bit of ground on the USD this week, and it really is the only major that's doing it. If this gets worse, get ready for the Nikkei to get worse. 38% down here. Pretty good little trade down around 150, 150-ish, something like that. So if you do get a significant move here, that's probably going to be the 38% level you want to be focused on. I would be watching that closely. The yen is alive, though. Kiwi yen. This is a fascinating chart. It really is a fascinating chart. It's a long-term monthly chart, but take a good look at what you have here. Right there, what do you have? Sort of last September. What do you have right there? That's January, right? January 1st. So this top to the April's bottom, and we have traded inside of that the entire year. So that's sort of the onset of the Trump administration, the trade wars, the tariffs, all that, and you're still trading inside of that if you're trading this Kiwi yen. So the way that I would address this is know where your yearly high is, know where your yearly low is. I'd probably be selling right up here at my yearly high just because more than likely we're going to continue to trade sideways. There is no real Fibonacci level to be had there. I wouldn't even bother putting a moving average on that. The volatility is not good enough to really pick a position. This would go back to one of those videos we did a long time ago in the How to Trade Academy, the Trading Academy, where we talked about basic chart patterns. That's a rectangle. Let me go ahead and show you. This is the Kiwi yen. I'll show you on TradingView, just because it's a little bit easier to illustrate some of these points. So here's the Kiwi yen. Go to a monthly chart. That right there's your yearly high. Very important right there. What do you got, though, for a chart pattern? There's really nothing there except what? It's a rectangle. There's your yearly high, there's your yearly low, and you're just sort of chopping inside. Right up here was a pretty good opportunity to sell. Went to 89.06. It came back down. I think if you get another chance to sell the yearly high, it's probably not a bad play at all. One last thing that I would point out here is my Bollinger midpoint and my moving average, my 13-period EMA. They're almost overlapping, and they're moving sideways, and my Bollinger Bands are parallel, which means what? The market is dead. It is in consolidation, and it's not moving directionally. So when that's the case, you want to play rotation. So for me, I would love to buy that lower Bollinger Band somewhere right around 82 maybe, and then selling up here at 89.70. Right now we're at 86.85, which we're trading towards the upper quartile of this range. Still could be very good. Remember, markets don't always have to move for us to get an opportunity to trade them. I love flat markets probably more than I like trending markets, really, just because most of the time you get a lot of trades, and some of them are very high probability. This type of area where you're selling the yearly high, it's not a bad play. It's not a bad play at all, that's for sure. All right, let's see. We got a couple more markets here. Great Britain, pound, Japanese yen. Yeah, this is going to be a big one as we roll deeper into the trading week. Remember, BOE is going to get involved. That's absolutely key. You want to make sure that you understand exactly when the BOE speaks on Thursday and know what to expect. Now, this one right here is tough. No two ways about it. I could draw something like this that goes back several years, July of 2024. So what is that, almost 18 months? We've traded inside of that range that we had developed in July and August of 2024, and we've done it for about 18 months. So let's go ahead and get rid of that. What could we say is a legitimate way to approach this market? It's pulling back right here. It's still not that great. I'd be looking at my yearly range again. April of 2025, the tariff wars, definitely put in swing lows for a lot of asset classes. Swing low right there to a swing high. And then there would be your pullback on your yearly range, 197.30-ish. Pretty good area, pretty good support zone. And then right there, you've got a moving average that's sort of creeping up, 196.24, somewhere in that zone. I think it could be pretty good. That could be a pretty good area. I would be definitely focused on that one if I was looking at the Great Britain pound, Japanese yen. So if you're a shorter term trader and you want some decent levels on maybe a smaller time frame, we could go to a weekly. You can see that really doesn't help us much. We've just got sort of a real tight compression 3 weeks. And now the first week in November, we're breaking out, trading beneath October's lows, I do believe, right there. So now we're pushing new lows beneath the moving average. I would be sitting down here at the 38%. I think that's where I would make my play from. If you wanted to do something on a daily chart, you may be able to get a situation on, take it down to a 4 hour where you may be able to get a pullback here and join the prevailing trend, which I don't think is a bad idea. But you just got to get a swing low to set up down there, and this would look something like that. Just depends on how low you really go before you get the pullback. From right here, you'd be selling 201s. Personally, I would love to see something like this develop, where we got an opportunity maybe to sell 200 evens. That could be pretty good as well. So I would be watching that on the short time frames. For whatever reason, the Japanese yen is showing strength. We would be very careful if you're trading these pairs because the volatility is there. I like my macro levels when the markets are this volatile. No question about it. Something to think about there. All right, guys, let's go ahead. One thing we could look at, US 100, interesting stuff. Interesting stuff because we had sort of a great big run-up where we broke through 25,000. We had a pretty darn good trade right in front of 2020. We wanted to scalp in front of 2750 right up in here. Still may get there, but we definitely have a bullish trend going. No question about it. You can see we broke through 38%. We're off about 2% today. You would absolutely love 78% down here. 25,000 as a potential support zone. That's not bad. 25,250. That's not bad either. But right now, the pressure is definitely down. So beware if you're trying to buy and pick a bottom of this intraday. That could be problematic in a lot of different ways. So remember, don't fight trends. This is a pretty strong daily trend to the downside. 25.5. Looks like there's some traders digging in from right here. Let's go to a 5-minute chart. 25.5 right here. This was your initial approach. You came down 514, had a nice bounce up here to about 550, and now we're down in here. Pretty tight scalping, but it's starting to turn into maybe a potential bottom for the day. I would be watching very closely, though. I think that you're going to have to get price is going to have to close above that level here relatively soon because we're going in towards the tail end of the trading day. You only have about 2 hours and 15 minutes left in the U.S. session, and you got to really watch that last 30 minutes of the trading day right before 4 p.m. Eastern. You get in big trouble there because that power hour, that's when the market gets really, really raucous. That's for sure. Let me see daily trend line touch. Yeah, there's all sorts of things going on. I mean, these markets. Hurst Horns loves the NASDAQ. Yeah, I mean, you could definitely make the case. I mean, there was sort of your big 5-minute bar. You could make the case to take the long trade right now. We could go down to a 1-minute chart. I mean, is this the time to do it? Sort of there's your last 4 minutes. You've got a nice little run, I would say. You had one right up here too, and then the seller stepped in and nailed it. Let's go to a 30-minute chart, have a look at where we're at. Okay, so here's your 30-minute chart. This looks like the beginning of the U.S. session right here. Nice big rally. That was your opening bell, ding, ding, sort of topped out and then reversed. Yeah, I mean, you don't really want to sell down here. You could try to pick a bottom. Just, you're going against the trend, and if you're going to pick that bottom, you've got to go sort of, your stop loss is going to have to be down in here, somewhere beneath the daily low, intraday low at least. That's trouble. I would wait. Until we got down to a better level, and I would do business from there. That's for sure. No question. All right, everybody, I'm going to go ahead and sign off here for a minute. We had one more news story that I wanted to cover. The government shutdown rage is on, but we do have elections today. Democrats fight to rebuild key state races. There's just a bunch of state races out here in the United States. But what we will see, what we're very likely to see, is the Mamdani, I think that's his name, in New York, far left candidate, more than likely going to get elected there. I think the odds were heavily on his side. So once that election's finished, once that vote's tallied and in, you're going to see a lot of news stories sort of condemning the administration, saying that Trump's losing popularity and the administration's doing all these things, and this is sort of the new opposition to that. I don't really know that that's going to be, if that's going to bear any sort of fruit politically. But what we do know is we're in an interesting period, and we've got things on the horizon that are potentially very serious for our markets. The Venezuela story is a big one. Don't be surprised if the United States does something right after these elections are finished. Don't be surprised. Now, I don't know. I'm not an insider. I'm just guessing. But that story's been sort of on the front burner of global finance here for the last I would say the last week or so. We're watching Venezuela closely. We're watching the U.S.'s actions in Venezuela closely. We're also looking for more tariff talk out of U.S. and China, which has been pretty quiet there for this week. So, I mean, it's an interesting time, but it's definitely bearish right now for U.S. stocks, at least on the intraday basis. So watch the dollar. The dollar's getting a little bit of puff back. Keep an eye on the dollar. Keep an eye on those risk assets. And also, we've got some really beautiful pullbacks developing in gold and silver. We didn't even cover silver, but there's a lot going on there. Tomorrow, I'm going to dive more into commodities. We're going to talk crude oil because the EIA inventory report's going to be out. So we're going to focus on crude, and we will be looking at commodities again, especially gold and silver. Remember, silver's sort of threatening that 45 level, that 45.50 level. That's a big one. We'll also be looking at these stocks too. Remember, stocks are still bullish. You just have to get a legitimate pullback here in a good trade location to the top side, or else we could get chopped up. Bitcoin starting to fight with 100, bouncing up a little bit. Bitcoin's definitely on my radar as well. That's for sure. Let me see. Hurst Horns, mass exodus from New York if Mamdani is elected. Yeah, I mean, that's realistically the business situations are looking at very, very steep taxation. You're also looking at greater regulations. A lot of businesses have already said they're leaving. But it looks to me, I mean, let's take a look at the predicted or the where the odds are right now on this race. This is the one everybody's watching. And right here, you've got Mamdani is up 90-10 over Como, and it looks to me like that's going to be a done deal, really a done deal. So, it's not necessarily 90-10. I mean, that would be a major surprise if Mamdani doesn't win. Somebody already knows something. It's done. So you're going to see a lot of changes in the tri-state area, that's for sure. We'll just wait and see how it all goes. All right, guys, I'm out. Have a fantastic trading session. If you have any questions at all, be sure to cruise on over to howtotrade.com. Sign up for your complimentary account. Send me a PM. I'll be more than happy to help you any way that I can. If you're interested in getting up and going, trading with a rock-solid platform, MT4, MT5, algo builder, all these different things, head on over to Switch Markets and see if you can get an account going there. Free demo accounts, and if you fund, you've got free access to Pine Connector and then also free access to Algo Builder. So a lot of benefits over there. Definitely want to check those out if you can. Let me see. Hurst Horns. Trump endorsed Como, and there are polls from New York voters saying they prefer Como. He is terrible, but at least he's not Mamdani. I mean, at the end of the day, if you have a candidate that is a socialist or a communist, depending on what side of the tracks you're from and what you believe the gentleman is, he looks like he definitely leans heavily into the socialism department, and that means higher taxes and higher regulations. No question about it. That's really tough on business. And there's already been a mass exodus out of New York City. A lot of businesses, a lot of folks. I mean, we have some traders that are down in Florida. I try to get down to Florida at least once a year on vacation. And you see so many folks from the New Jersey, New York area that have moved. They've moved their lives, their businesses to Florida. And a lot of it has to do with taxes, just because it's an easier place to do business. And New York probably looking like it's going to get a lot harder to do business there. No question about it. Glad I'm not in New York. Yeah, it's a lot of people for me. But if you're in New York, I hear great things. A lot of people that live there really love it. I've never been. I flew through it once. Never put any time on the ground there, though. I hear you're supposed to go there and eat, though. It's like one of the places that you want to hit some of the restaurants. Great culinary stuff there. But, yeah. Let's see, Tina. Yeah, no state tax. Yeah, Florida's very attractive for a couple of reasons. Definitely no state tax is one of them. Wyoming was another one that didn't have any state taxes, and a lot of businesses moved out to Wyoming, which isn't too far from here, but man, it's a very rural area. Prices in the Cody area went through the roof. A lot of Kanye West bought a place up there and then sold it. So rural Wyoming became the place to be. In Florida, it was very similar. The taxes are a big deal, especially when you're trying to run a business. All right, everybody, I'm going to go ahead and sign off. Have a fantastic trading day. If you need anything, I'll be around. Have a fantastic week. I'll keep you posted on the stream schedule. It's in flux. I don't think we're getting NFP Live Friday, which is too bad. That'll be the second month in a row we've had to delay. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.